Hey everyone, welcome back to Corporate Decoder. Today, P.L.M.K.U just filed an 8K announcing the estimated redemption price for their shareholders meeting, and I'm seeing a key piece of information that tells us more about their plans. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is mostly about an upcoming shareholder vote to extend the company's deadline to find a business combination, and it gives us a peek at how much cash is left in the pot for redemptions. Alright, so what is this all about Plum Acquisition Corp? Ivy, also known as P.L.M.K.U, is holding a shareholder meeting on the 10th of July. The main goal of this meeting is for shareholders to approve an extension for the company to find and close a business combination. We are talking about pushing the deadline from the 16th of July 2026 all the way to the 16th of January 2027. And get this, they might even be able to extend it further month by month up to July 2027. This is a common move for special purpose acquisition companies, or SPACs, when they need more time to complete a deal. Now, the really interesting part for shareholders is what they call the redemption price. If you own shares in P.L.M.K.U and you want out before the company merges with someone else, you can often redeem your shares. This filing gives us an estimate for that redemption price. As of the 9th of July 2026, the amount in their trust account, which is basically like a savings account for the money raised in their IPO, was about $184 million. When you divide that by the number of outstanding public shares, the estimated redemption price per S-share is around $10.70. Now that is pretty close to the stock's closing price on the 9th of July, which was $10.77. This tells us that the market is pretty much pricing in this redemption value right now. This whole situation is pretty typical for SPACs nearing their expiration date. They often need to extend their time to find a target company, and sometimes that involves offering shareholders a way to get their money back at a certain price. If the company doesn't find a deal, the shareholders who chose not to redeem might end up with a company that is not what they expected or worse. Let's talk about the risks here. The company is saying they can't assure shareholders they will be able to sell their shares in the open market if the market price is higher than the redemption price. This is because there might not be enough buyers for the stock when they want to sell. This is a crucial point for anyone holding these shares. If you are hoping to cash out at a better price than the redemption value, you might be stuck if liquidity dries up. The filing also mentions that shareholders who previously asked to redeem their shares can still change their mind. They have until the 10th of July at 9 AM Eastern Time to withdraw their redemption request. This gives people a bit of flexibility as they get closer to the shareholder meeting. Now, looking at this from a broader perspective, Plum Acquisition Corp. IV is a shell company formed to merge with another business. Their entire existence hinges on finding a suitable acquisition target and completing a deal. The fact that they are seeking an extension signals that they haven't found that perfect match yet, or that negotiations are taking longer than expected. This delay itself can be a risk because the longer a SPAC goes without a deal, the more its value tends to erode. We have seen this pattern time and time again with other SPACs, where those that extend too long often end up with disappointing outcomes for their investors. For instance, many SPACs that went through extended periods without completing a merger saw their share prices significantly decline, averaging a 70 to 90% drop from their peak in the year following the SPAC market peak. The company is also cautious with its language in this filing. It uses phrases like forward-looking statements and warns that actual results could be very different from what they are projecting. This is standard legal language, but it underscores the inherent uncertainty in this type of investment. They mention risks like international economic conditions, geopolitical risks, and acts of war, which are broad categories, but highlight the external factors that can impact any business, especially SPACs, whose future is entirely dependent on a future transaction. The company originally went public with an IPO of $150 million. Now they are in a situation where they need to extend their timeline to deploy that capital. The current estimated redemption price suggests that a significant portion of that initial capital is still available in the trust account. However, the closing price being slightly higher than the redemption price indicates a bit of market optimism, or perhaps a belief that a deal might still be forthcoming. But the warning about market liquidity is something every investor should heed very carefully. If you are counting on selling your shares for more than the redemption value, you need to be sure there will be buyers. So what is the takeaway here? This filing is essentially a heads up to shareholders about an upcoming vote to extend the company's life and a signal of the current cash available for redemptions. The need for an extension is a common but always a bit of a yellow flag for SPACs. It means the clock is ticking and the pressure is on to find a deal. The estimated redemption price is a critical piece of information for shareholders deciding whether to stay invested or take their money and go. The risk I am watching is whether they can find a compelling business to merge with before their extended deadline, and whether that merger will actually create long-term value for shareholders beyond just returning the cash in trust. My biggest concern is that a rush deal could lead to poor investor outcomes, similar to many SPACs that have struggled after their mergers. What I'm actually looking for is a clear strategy and a target company that presents a genuine growth opportunity, not just a way to deploy capital. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown useful, please hit like and subscribe for more deconstructed filings, and join our Discord for further discussion linked below.